Hello everyone. Today we are going to discuss about a very important topic which is connected to every single person who has relatives abroad or who want to transfer money abroad. Just imagine a situation that you have a friend abroad and the person gives you some money, and that comes as a huge sum of money into your bank account. You are happy that you got a gift from someone, and suddenly an income tax notice also comes to you stating that you received a sum of money and you're supposed to pay tax on it. So in such a case, what would you do? You would be tensed about the situation and say, okay, I just got a gift, and how come I have to pay so much of income tax on it? So today's topic concerns the gift from NRIs to Indians, to basically the residents in India, and how this particular transaction would be framed, how it would be actually coming under the legal scan of different acts, what things you should keep in mind when you're transferring money out of India into India as a gift. Since I got many questions and queries on this particular part of whether gifts are taxable, whether gifts would be exempt in any case, so I thought of making this video on Commerce Gyan for your information. Do watch this video till the end because there are many key points that will be coming up, popping up in between each of the parts of this video, which will be helpful and useful for you in such transactions. And just in case you haven't joined Commerce Gyan, do subscribe to this channel to get more such information ahead. So what are we going to understand in this particular video? The first thing that we'll understand is what is the meaning of this term gift. What is considered as a gift? The second important thing is what would be the acts that prevail and which are actually applicable when you are transferring money out from outside India by, let's say, an NRI to a person who is resident in India. Third thing is what is the taxation limit of such gifts and such transactions. Fourth important thing we'll see is what should be kept as a proof so that you can furnish it to the income tax officer to prove that particular transaction of gift. The fifth part that will be very interesting for you and very important to understand whether or not your gift or the gift that is being transferred from one person to another can have some exemptions in a case of relatives. And finally, we will have some special exemptions that are taken into consideration when you're talking of gifts from NRIs. At the same time, one important thing that you should note is that there are a few changes that have come up in the taxation and in the gifting structure related to NRI gifts from 1st of April 2024, which also we are going to cover in this video. So do watch this video carefully, each point till the end, so that you get a whole idea and a whole picture of these transactions. So the first part that we are going to consider is what is considered as a gift. So as soon as say the word gift, what comes to your mind is something which you've got in terms of money or in terms of something that you get without an obligation to give it back, right? So you can accept it, but you don't need to return it. There is no legal binding to give something in return against this gift. So that is why it is called as gift. Now, what can be called as a gift is money. So if a person gives you hard cash or the person gives you an amount, like nowadays we have different money transfer apps like GPay, Paytm, whatever. So you can transfer from one account to another directly online, or you have NEFT, you have RTGS, you give a check, you give a demand draft, whatever the case is. So these will be coming under the head or the purview of money. So money is the first way by which gift can be given. The second is a gift in the format of immovable property. So what is considered as a gift is also immovable property. So suppose somebody gives you land or a building or a flat or whatever against no consideration, then that particular thing will be considered as gift. Okay. Then comes jewelry, antiques, any kind of watches and precious metal stones. Okay. Then if we have to talk about cars and white goods, these are not considered as gifts under this particular act. So basically for the gifts from NRIs, if you get a car or if you get any kind of white goods, then these will not come under the purview of gifts. Though it is normally that we can gift each other some vehicle or anything, but under this particular act, it is not considered as a gift, right? Then comes shares, listed securities, or any unlisted securities also, that will be coming under the purview of gift. So people can transfer the shares, can transfer debentures or any such things against, you can say, no consideration. So I just want to gift somebody my the shares or the portfolio that I have in hand, and that is possible. Then if there is a marriage happening, obviously many people would gift each other something. So if you have a brother or a sister getting married in India and you are staying abroad, you come here and you make some gift or a transfer of an amount or property or anything in the name of that brother or sister, then also this is coming under the purview of gift, right? Inheritances, anything in terms of a transaction, an amount received against a will. So if there is inheritance, if there is something received as ancestral property, then this is also coming under the purview of gifts. Now, what is important is anything which is falling in this definition should have no consideration or inadequate consideration. So these are two things to remember. So gift can be only in cases where there is no consideration. What is consideration? Consideration means something in return. So if I give you a flat today, I transfer that flat in your name, I am not asking you a single rupee against it, correct? Or if I give you 10,000 rupees today, I'm saying, okay, this is a gift, means I don't expect that money to come back, correct? So there's no legal obligation to return that money. And that's why we say there is no consideration, no obligation of returning it or giving something else in return to it. Like suppose you go to a shop today and you buy some clothing, and for that clothing you make a payment of 10,000 rupees. So meaning when you take clothes one side, you are making a payment of some amount. So this is where there is consideration in return. So you buy something, you pay something. So this is two-way transaction, which does not happen in the case of gifts. Or even if it happens, it is very low in value. Like suppose a property of 1 crore being transferred to somebody and you take a very nominal amount like 1 lakh rupees. So this also can be considered as gift because there is inadequate consideration. It is not sufficient amount of consideration. Hope these points are clear of what is considered as a gift. Now, exemptions, what is not, what is falling under the head of taxability, what is not falling, all that we'll see later. But this concept of gift should be very clear to you. Next thing that we need to keep in mind is what are the acts that are governing the NRI gifts. So any non-resident Indian gifting something to a person in India, basically a resident in India, you will find that these acts apply. What are these acts? The first one is FEMA Act. FEMA Act 1999, meaning Foreign Exchange Management Act. Second, this act of FEMA basically is concerned with how much money can be transferred. So there are limits on the transfers amount. There are certain rules and regulations to be followed. There are certain benefits given under the FEMA Act. So all that falls under the FEMA 1999. Next comes is Income Tax Act 1961. Income Tax Act is something which is concerned with, you can say, the taxability of these gifts. So if an NRI is sending some money into India, is it taxed? Is it not taxed? Is it taxed fully? Is it taxed partially? Is there any exemption? All these rules, regulations will be falling under this Income Tax Act 1961. And then comes the third part, that is other acts. So if you go and register some gift deed or anything, then the Registrations Act 1908 and such other acts will come into consideration. Now, next part, which is very important, is the taxation limit of this applicable, what is applicable in case of NRI gifts. So if you take into consideration the gifts which are given or received, we need to see how much is the amount, first thing. So all these acts will all, like the FEMA Act and the Income Tax Act, will take into consideration what is the amount transferred. So if the amount is within limits, it is falling in the exemption, then different rules will apply. So we need to first understand what is the amount of transfer. Then we need to also check what is the residential status of the giver and the receivers. And if at all any kind of exemptions are applicable, which are there, I mean, we'll come to that later in the video. Basically, there are a number of exemptions which can be useful and helpful for people who wish to transfer the amounts from abroad to India. So you will have to wait till that particular section comes up for exemptions. So now when we're considering the taxation limit applicable, the first part that we need to consider is the amount of gift, as we talked of. So what is the amount of the gift that would be taxable? So any gift. So you have to pay attention to this part very carefully, because this will be coming ahead also in the video, and you will have to remember this when you're gifting. So remember that any person can give a gift to anyone. There is no binding on it. Like, you don't need to be relatives, you don't need to be friends, you don't need to be anything. Anybody can gift anybody else. But if you are not falling in the exemption category, then the limit of this gift to be non-taxable is up to 50,000. So anything above 50,000, whether it is money, whether it's immovable property, whether it's the in the definition of gifts, whatever is falling under that, if that comes up, then you will face taxability. So anything above 50,000 is taxable. Keep that in mind right now. Then we'll go ahead to the exemptions later. Then gifts in cash or kind does not matter. If it is a gift in money format, fine, it will be taxable if it goes above 50,000. If the gifts are in kind, that is any kind of property, shares, securities, then also 50,000 limit applies. Fine. So this amount of gift part is clear for you. The second is if we are talking about the residential status. Now for our discussion here, we are talking about gifts from NRIs. So here we are talking about giver is NRI. The person who gives the gifts is a non-resident Indian. So if giver is NRI and receiver is let's say is a resident, then that 50,000 limit applies. And if receiver is NRI, so you're transferring from India to abroad, but it is not just NRI, non-resident Indian, but it is also not ordinarily resident, which you will have to check the residential status in the Income Tax Act. That is a separate thing you can study. But right now, remember, receiver, if his status, the residential status is NRI and not ordinarily resident, then the gift will be exempt up to 50,000. But anything, above that, it will fall in the definition of income in India. So that is something which has changed from 1st April 2024, where every single amount received by NRI and not ordinarily resident will be taxed in India, will be shown as income in India, received in India, and they will have to file the income tax returns here. Okay, depending on, of course, the exemptions and everything. Then comes what are the applicable exemptions. Now, this is very, very interesting and important part for everyone, because obviously you will want to take the advantage of exemptions, if any, in terms of NRI gifts. Now, by now you may be thinking that, okay, I did a transfer last year, I did so much of transactions last year, and now I didn't pay any tax, right? But maybe you have a limit in terms, or you may be falling in the exemption limit. So just check out if that transfer, if that transaction was coming in the exemptions. So what is it? What are the exemptions? The first part is gifts between relatives defined under section 56(2) of the Income Tax Act will be considered as exempt. There is no monetary limit for it. There is no monetary limit for it. So remember this part, that gifts between relatives. And what are these relatives? The relative term is defined under section 56(2) of the Income Tax Act. Now, what is this 56(2) of Income Tax Act? That we'll see a little later in the video. Just wait, have patience to know whether or not that relatives definition applies to you. Got it? Now, second exemption. Now, this is very interesting one and very important one. Gifts received as inheritance or during a marriage. So anybody who is inheriting property, inheritance means between the family only, correct? So any gifts received as inheritance will not be taxed at all, and there is a complete exemption on it. And secondly, if a gift is received during marriage, so if a marriage is happening in India, an NRI sends some gift for that marriage, it becomes exempt completely. Okay, so there is no binding factor of relatives or anything of that sort, but gifts received during marriage will be exempt. Now, what are the formalities to be fulfilled? Very important. So there are times when there are cases filed, or there are, you can say, notices issued by the income tax officials, asking for, you can say, the details about the gift. So if you have shown the gift as to be exempt, even though it is exempt, there is no problem. But if you have shown it as exempt and it's a huge sum of money, there could be a possibility that you are asked to prove that it is exempt. So there are two parts. One part is proving that it was a gift. So it was not your income, right? And second important part is to prove that this gift was exempt in case it was, right? So what you need for that? First, you need a registered gift deed. So I'm sure a gift deed is something which you may have heard of. It is a legal document stating very clearly that this person is the donor, this person is the receiver, and hence this property or this asset or whatever is transferred from person A to person B. So that gift deed should be registered. Second important thing is there should be documents to prove your relation as a relative in the case you are claiming an exemption. So if you say that a husband has gifted some money to his wife and the wife has claimed an exemption, then the wife has the obligation to prove that the exemption is applicable because the amount is received from the spouse. So what should she show? Obviously, for proving a marriage in India, you will have to show your marriage certificate. Fine. So that could be acting as a very clear document for proving that it was a gift from a relative. There would be some regulations to be followed under the Foreign Exchange Management Act. So, what are the formalities now under the Foreign Exchange Management Act? Let's come to that. Now, if you see the FEMA requirements in detail, you will have first important thing is that any kind of NRI or OCI can gift only through NRE or NRO accounts, not any other account. So any gifts, it should come through NRE or NRO account. Yeah. Second, the power of attorney holder cannot gift. So if you have an account and if you appoint a power of attorney saying that, okay, now you transfer this money to my mother or to father or to brother, sister, and that gift comes to them through a power of attorney holder, it will not be considered as a gift. Got it? So that will create a problem later. Then now the FEMA Act has a binding that you can keep maximum of $2,000 in cash. So cash gift cannot be held by a resident of India in a value of more than $2,000. So if I want to keep dollars as it is, maximum I can keep is $2,000. That's it. Fine. And finally, you may have heard of LRS scheme which has come up, right? Liberalized remittance scheme, which applies to gifts also, and that gifts given to NRIs or by NRIs. So the transfer, if you want to gift somebody abroad, that means from India you wish to transfer to them or they wish to transfer to you, the LRS scheme applies, and that maximum remittance under the liberalized remittance scheme that you can make in a year is $250,000. So that's quite huge amount. So there's no issue, right? So LRS schemes gives you a huge benefit. And if it is between two relatives, no problem. You can transact any number of times up to the valuation of $250,000. There is no limit on transactions. That is number of transactions. Only cap is the amount. And that amount also within one financial year. Now comes the most important thing that we need to take up, and that is the definition of a relative, which is defined under section 56(2) of the Income Tax Act, right? Now, what is a relative? Relative, one thing to remember is we are talking of individual, right? So if we are talking of relatives, it is concerning a specific individual. Now, in this case, we are talking about the individual spouse. So if that person is a lady, then her husband. If that person is a man, the man's wife will be the considered as the relative of the other person. Next is brother or sister of the individual. Now, brothers or sisters of the spouse of the individual. So if your wife has a brother, wife has a sister, they will also be considered as your relatives. Got it? Next is brother or sister of either parents of individuals. So parents will come in the definition of the relative, and at the same time their brothers or their sisters will also be considered as relatives. So if you have your mother's brother or mother's sister, then they will also be your relative. Got it? Next is any lineal ascendants or descendants of individuals. So your parents or your children, they will be considered as the relatives. So parents and children will fall in the definition of relatives. And any lineal ascendants or descendants of spouse of individual also will be considered as relative. So if you're talking of the wife's parents, yes, they are your relatives. If obviously the wife's children also will be your relative. Got it? Then the last part is important. The spouse of the person referred from point number 2 to 6 above will also be considered as relative. So if you find that your son, you can say son's wife, that son's wife also becomes your relative because she is the spouse of your lineal descendant. Now, for a quick revision, let us take some cases. Now, you take some time and you can think over these cases one by one and then refer to the video if you're right or wrong and you've understood this video well or not. You'll understand. Okay. So, if you take one case by case and just give the answer before I give it in detail to you, you will find it as a revision. So, let's take the first one is money, cash, check, draft, any format of money. What is the limit? Yes, 50,000 rupees maximum can be exempt, correct? Value of gifts up to 50,000. Any gifts received in kind below 50 or up to 50,000? Yes, exempt. Then property, money on occasion of marriage, exempt. Gifts from specified relatives, 56(2) definition, remember, exempt. Then gifts from someone who is not a specified relative. Then what happens if they are not a specified relative? Then exempt up to 50,000. Above 50,000, taxable. Immovable property, land, building, house, whatever, received as gift. The cap or the exemption limit is 50,000 in this case also. If it is from specified relative, no limit, right? Shares, securities received as gift. The maximum capping is 50,000 in this case also. Of course, exemption concerning relatives will apply. Got it? So this is how you can use this particular slide. I mean, you can use this particular part of the video again to revise what the exemptions are in which cases. Got it? Now let's take a few things which when residents are gifting NRIs, you have to keep in mind. The first important thing you need to keep in mind is immovable property as gift to NRI if the sales proceeds do not exceed the $1 million per year. So it is considered as gift, $1 million per year, immovable property as gift to NRI. Got it? So it is not, you don't need to think of this as any other taxable amount. Next comes Now, whether you can transfer that money or not, again, liberalized remittance scheme will apply. And there is some specified benefit given for immovable property. So you may have to fill an extra form and then transfer the money if it is $1 million. Got it? Next comes share securities. They should not exceed 5% of the paid up capital of company. Then it is no problem. Correct? Gifts received from specified funds, educational institutions, trusts, scholarships. So all these will be considered as exempt. So if you receive a scholarship in India and that is transferred to the non-resident Indian, let's say your child is studying abroad and you need to transfer some money as scholarship received by an institute, then it is exempt. Income generated from gift is taxable in India. Now, this is a very important point. Now, suppose you, as an Indian resident, has gifted an property, a flat to a non-resident Indian. Then what happens? That gift is maybe if they are your relative, that gift is exempt. There is no problem. You gifted that flat, they are happy, you are happy, no income tax applicability on it. Now comes the point, what if the non-resident Indian has given this particular property on rent to someone in India, or any person is going to stay there and pay the rent to the non-resident Indian? Now what? Will this particular amount be taxable, and will it be taxable in India? The answer is yes to both. The rental income received from the gifted property will be taxed in India, and there will be charge of tax as per the slab rates of income tax. Correct? There won't be any kind of zero exemption. So if you receive any income considering that gift, then this amount of income received in India will be taxable in India as per the slabs. Got it? Finally, any monetary gift. Now, this is something which we discussed earlier, which is applicable now from 1st April 2024. Monetary gifts received by not ordinarily resident from residents. If you receive money, NRI has received some money from Indian person, then this falls under the definition of a taxable income unless and until you're a specified relative or person. This amount will be considered as income in India and it will be deemed to arise in India and taxable if it exceeds the limit. So if it is given from one friend to another without having any specified relative definition, it will be taxable in India if it exceeds 50,000 rupees. So that's an example to show this particular point. Got it? So these are all the things that we have understood today about the gifts received from NRIs or gifts given to NRIs also in turn. And this can be useful to you the next time you make any remittance to a person abroad or receive a remittance from a person abroad. So hope this video is useful to you, and just in case you have found this useful, you have liked it, please press the like button and put your comment how you found this video. Also do share this to people who would be finding it useful in such kind of transactions. So in case you have not joined the journey of commerce, also in case you have not joined this particular platform of Commerce Gyan, you're most welcome and please subscribe to this channel. Hope to see you in the next video of Commerce Gyan. Thank you.